Imagine two people walk into the same bank. Same branch. Same Tuesday morning. The first person overdrafted their account by $4. A forgotten coffee charge. The bank charged them $35 for it. They called to dispute it. Nobody called back. The second person has $5 million in that same bank. When they call, someone picks up on the second ring. No hold music. No script. Just, how can I help you today? Same bank. Same building. Same Tuesday. Two completely different institutions. This video is about the invisible system running underneath every bank in America, and exactly what it takes to move through each level of it. Level 1, negative balance. You forgot a subscription charged. It was $4. You went negative. The bank doesn't care that it was $4. The bank runs the math. And the math says, overdraft fee, $35. Here's the part nobody talks about: the penalty for being broke is that the system makes you more broke. Within 24 hours, another charge processes. A $7 streaming service. You're already negative, so the system fires again. Another $35. You now owe $77 to a bank, over $11 in actual spending. You call. You wait. Hold music. A voice. A script. Fees cannot be reversed at this time. You ask for a manager. They say someone will call back in 48 hours. Nobody calls back. Your rent payment fails the next morning. Your landlord charges a $75 late fee. Your phone bill bounces, $25 more. The $4 mistake is now a $200 problem, and it's still moving. You skip lunch on Wednesday. Not by choice. You walk past the place you usually go, and you keep walking, like you were never going there. Your coworker asks if you want to grab food. You say you already ate. You didn't. You go to the branch on Friday. The teller looks at her screen. Her face shifts, not with anger, not with pity, with something colder. A kind of professional distance. You stop being a person in that moment. You become a flag. A risk category. A score in shoes. You leave without saying what you came to say. Level 2, $200. You pulled it back. 20 hours of overtime. You got above zero and held it there for a week. Nobody noticed. Nobody clapped. The bank noticed, but not the way you hoped. The maintenance fee hit anyway. $12 this month. Sometimes $15. Quietly withdrawn overnight. No notification. The system doesn't explain, it executes. To waive that fee, you need a minimum balance of $1,500. You don't have $1,500. So the fee stays. You are literally paying a bank to hold the money you barely have. You apply for a credit card. They offer you a secured card, which means you have to give them $300 of your own money, so they can lend it back to you at 24% interest. Read that again. You don't take it. Which means when your tire blows on a Tuesday morning, there's no backup. You ride the bus. 3 hours late. Your manager doesn't fire you. He just looks at you a little longer than usual. You go to the branch again. The teller helps the person in front of you, warm, laughing, asking about their kids. When you step up, the warmth resets. Professional now. Efficient. She processes your request in 40 seconds. Doesn't ask if there's anything else. Doesn't say have a nice day. The next customer walks up. The smile returns. You weren't refused. You weren't insulted. You were processed. Moved through like luggage on a conveyor belt. At $200, you exist on the bank's books. You don't exist in their attention. Level 3, $2,000. Something shifts, and it isn't your personality. Your direct deposit hits consistently. $1,600 every 2 weeks. Same amount. Same day. For 6 months straight. The pattern is what the system notices. You became predictable. Predictable means profitable. The maintenance fee disappears. Automatically. The same fee that drained you for years, just gone. Nobody told you it would happen. Nobody announced it. The system saw your deposit pattern and quietly stopped charging you. The credit card offers start arriving. Real ones this time. A $2,000 limit. 22% interest. Pre-approved. Metallic ink on the envelope with your name spelled correctly. 8 months ago, they wouldn't touch you. Today, they're mailing you envelopes. You didn't change. The number did. You apply for a small loan, $5,000 for car repairs. Approved in 48 hours. Interest rate, 11%. The process worked exactly the way the commercials always promised it would. But here's what nobody tells you: the bank doesn't care who you are. The bank cares what your account looks like. And at $2,000, your account looks like something they can sell products to. You're not invisible anymore. You're not respected either. You're profitable. That's a different thing entirely. Level 4, $15,000. You didn't ask them to raise your credit limit. They raised it anyway. $4,000 became $9,500 overnight. The bank decided you were worth more rope. Then the phone call comes. A real person. Not automated. Your bank assigned you a relationship banker. He gives you his direct number. He asks about your goals. Your savings timeline. He wants to schedule a 15-minute review. The same bank that left you on hold for 40 minutes at $200 just called you first thing on a Tuesday morning. A fee appears on your statement, $32. You email your banker. 3 hours later, taken care of. No phone tree. No form. No script. The same fees that drained you for years are suddenly optional. You buy a used car. The interest rate that would have been 11% at level 3 is now 6.8%. The price of money got cheaper. Not because you negotiated. Because you stopped being a risk. You're not just a customer now. You're someone the bank doesn't want to lose. There's a difference. And you can feel it every time they pick up the phone. Level 5, $80,000. The word on your statement now says, preferred client. Your banker remembers your sister lives in Chicago, because you mentioned it once, 9 months ago. He emails you on your birthday. Not a mass email. A written one. The detail feels personal. It isn't an accident. It's training. The bank teaches him to remember small things because small things keep accounts. You walk into the branch and someone stands up before you reach the teller. They guide you past the rope line, the same line you stood in for years. You didn't know there was a bypass. You were standing inside the barrier, not seeing the door beside it. A pre-approval letter arrives for a $400,000 mortgage. The bank decided what you could afford before you decided to buy a house. They want the relationship before you've even picked the property. When a competitor bank calls with a better rate, you mention it to David. He calls back within the hour with a counter. The institution that once ignored you is now competing to keep you. At $80,000, you're not preferred. You're worth defending. Level 6, $500,000. The bank stops being a place you visit. David's colleague drives to your office. He brings a leather folder with printed reports. He asks about your estate plan, your tax structure, your timeline. At the end of 90 minutes, he doesn't pitch you anything. He just leaves a card. The selling already happened. You just didn't notice it. You're not being offered products anymore. You're being consulted. That distinction is worth billions to the industry. A product is something the bank wants you to buy once. A consultation is something they want you to need forever. A wire transfer freezes. You call. Someone answers on the second ring. The problem is resolved in the same conversation. You attend a private dinner. 8 clients. A view of the city you've never seen from this angle. Nobody mentions money all evening. Money is the table, not the conversation. At $500,000, you're not a customer. You're an asset they protect. Level 7, $5 million. This is where the rules change. Not bend. Change. Your private banker manages fewer than 20 accounts. Yours is one of them. He knows your kids' names. He knows about the foundation you're considering because you mentioned it over coffee last March. The mortgage rate on your next property isn't published. It's negotiated. In a phone call. Between 2 people. The minimum investment threshold on a private deal? Waived. Because the relationship justifies it. You walk into a branch you've never visited. They know your name before you sign anything. A flag in the system, not because you're famous. Because of your position in their architecture. You sit in a conference room with no logo on the door. The table is one solid piece of wood. The deal being discussed won't appear in any prospectus. The room only opens when the relationship justifies it. At $5 million, the bank doesn't just follow different rules for you. It writes them. Level 8, $25 million. You don't have a banker anymore. You have a relationship. 3 people inside this institution exist, in part, because of your account. They don't know that. You don't either. But the math is real. Investments come to you before they're publicly listed. Deals are structured around your participation before you've agreed to participate. The chief investment officer asks for your opinion on emerging markets. The head of private banking flies out to ask what their next tier of clients should expect from the institution. You are now shaping the bank that once charged you $35 for a $4 mistake. You are not a customer at $25 million. You are a partner. And the partner has a name. Right now, somewhere, someone is staring at a minus sign. They overdraft by $4. A coffee charge. The fee hits within the hour. They call. They wait. A voice reads from a script, fees cannot be reversed at this time. They don't know yet that the system isn't broken. The system is working exactly the way it was designed to. The bank that will one day fly someone out to ask their opinion on wealth management is tonight charging a different person for not having enough. You are the same person at every balance. The bank just decides who you are based on the number next to your name. The institution doesn't change at every level. Your tier does.